Good morning and welcome to the morning market review live stream. My name is Russell Shaw. I'm a senior market specialist at FXCM. Today is the 15th of March, Friday. Just going to go ahead, bring up our disclaimers. If you can just have a read through this. This is the high risk investment warning. I'll keep this on screen for a few moments. If you can take a read through that, it would be appreciated. Thank you very much. Just another few seconds. All right, just bringing up the market commentaries disclaimer. If you can have a read through that as well, please. Okay, excellent. Let's go ahead. We'll bring up the real rate. Okay, so this is the real rate, and yesterday we did label some peaks and troughs. We put in the reference trough T, we put in the reference peak P, then we put in the higher trough, and we just, this week, the real rate's really climbed. It's close to 2% now. It's 1.98%. Has really shown a strength this week. If we go through to the daily chart, you can see that yesterday we had a big increase yesterday, and then the obvious question is, well, what was the... Hey Raj, good morning. Good morning, Anna. What was the news yesterday that effectively came out and really drove the real rate higher? And it was the PPI. We had the CPI on Tuesday. The CPI on Tuesday was hotter than expected. Well, guess what? The PPI, the inflation on the producer side, was hotter yesterday. So we're getting inflation that seems to be coming back. We want to keep an eye on the core PCE. That's what the Fed keeps an eye on. But the inflation readings will be correlated with one another. So the fact of the matter is that there has been inflationary, dare I say, scares this week. Another data point that came out hotter than expected was unemployment claims came out better than expected. So by and large, we've got this movement up in the real rate. Keep that in the back of your mind, because the real rate tends to have a positive correlation with the US dollar. So if the real rate's moving up, one would expect dollar to be moving up. Well, if dollar's moving up, then the other majors probably having some sort of pressure applied to them. Also, real rates tend to have an impact on the risk market. As interest rates move up, it affects the required rate of return, and that puts a pressure on the present value of the risk market. So all in all, this is something that we need to just keep in mind when we take a look at the instruments to see if there are any potential opportunities here. Let's go through to just see how the US dollar has reacted. Bear in mind that it has a positive correlation with the real rate. Okay, so I'm just bringing up the US dollar. Okay, and yesterday we did say, look, it's below the 30-week exponential moving average, but we've just got this blue candlestick for this week. And the reason we have this big blue candlestick for this week, well, is because the real rate is starting to show signs of support, right? So the idea here is we just need to keep an eye on the fact that we are at this 30-week exponential moving average, and we want to just see if it holds below the 30-week exponential moving average. If it holds below and the RSI stays below 50, then, well, the dollar perhaps acting antithesis, perhaps, acting antithesis to the real rate creeping up, or perhaps it's the dollar market participants that are saying, hang on a second, the real rate is has moved up this week because of those inflation squares, but inflation scares. But the idea is that inflation should be moderating going into June. Now, we have to be very cognizant of the fact that a rate cut has been pushed back from March to May to June. If it gets pushed back from June, okay, then I think the market's got to react. It's got to react. So the idea of a strong inflation reading here is something for us to keep on top of, because if the inflation carries on being sticky, gee, I don't know if we're going to get that rate cut in June. All right, so just bear that in mind. Let's just take a look at US dollar on a daily chart, see if it's still in zone 3. All right, it's actually pushed into the neutral area. So the fact of the matter is, we never got the reference candle reversal here, and we've got the dollar that's pushed back into zone 2. That's not It's not particularly good, because we haven't been able to exploit any rallies in the downtrend, so to speak. And the fact that it's moved into zone 2 is the neutral area. It's the area where we kind of starting to lose that downwards push. Okay, so let's just keep an eye on it. What potentially could happen from here, we still are, if I had to say, are we closer to zone 1 or zone 3? I think we could all see we're closer to zone 3. We haven't quite crossed over into the bullish area here yet. Okay, we haven't quite crossed over into the bullish area yet. What we can do is just put in a line in the sand over here. All right. And we can see if we get some sort of reference candle over here. So let's just go back to the weekly. So we are below that 30-week exponential moving average. Now it's testing that 30-week exponential moving average. Assuming that the 30-week exponential moving average holds us a potential resistance, and assuming that the RSI stays below 50 on the weekly, then we go through to our daily. And what we are looking for on the daily is a reference candle reversal. Okay. Now, I don't know if we're going to get the reversal. Yeah, we short one candle, right? So we need to get Monday's candle. And Monday's candle is going to have to close below today's low. And this candle over here is not a complete candle, so I don't really know if this is the low or not. So we'll just keep an eye on it. We are at least one candle away from getting a proper technical signal. Okay, so a little bit of patience is required here. Let's just go through to our hourly chart just to see if we're getting any crossover signals there. Okay, so this is the hourly chart, and you can just see that the PPR completely disrupted the technicals here. Well, we got a negative crossover 1, a negative crossover 2. We never made it down to the lower quintile, and then we've got the the inflation data, which really just rocked the market, and we got it moving to this side. So you can just see how important the data was yesterday, and how important any indications of inflation are at the moment. If we are going to get a reference candle over here on the daily, then on the weekly we would need to see a crossover to the downside here. Okay. We would need to see some sort of weakness here on the stochastic and a fall back here. Again, I want to reiterate, we are at least one candle away from getting the technical signal. At the moment, the dollar is moving up. It's moved up in terms of relative strength. It's gone from zone 3 to zone 2. That's actually a step forward. So it just didn't quite work out the way I was hoping it would work out yesterday, and that just is an indictment, not an indictment, so it's just an indication of how strong the data was. Let's go ahead, just take a look and see what's happening on the euro side of things. Okay, so here's euro, and you can see that, yeah, we are above the 30-week exponential moving average. That's what we said yesterday, but it's come down. So we've got this red week. Well, if we're above the 30-week exponential moving average, and the 30-week exponential moving average still moving in that northeasterly direction, the RSI above 50, the fact that we've got some sort of red here, what we can do is we can just try and see if there is an opportunity for a dip in the uptrend. Again, I'm not sure, we'll take a look on the daily chart now, but we probably got to wait for the that extra candle on the daily chart. Let's just go through to euro, US dollar daily. Just bear with me, bringing that up now. Okay, here it comes. And you can see it's very similar to the dollar, isn't it? It slipped back into zone 2. So there's relative weakness here from zone 1 into zone 2. See, it's been quite a tough week, unfortunately. The market hasn't quite cooperated. And again, that's really an indication of the inflation data that's coming out is just proving to be much more sticky than really what's needed. Okay, so we've pulled back towards the 50 area. We just want to see if it crosses over to the 50 area or not. Okay, so just keep an eye on whether it holds above 50. That would be bullish. If it drops below 50, carry on moving towards zone 3. Gee, that's going to be difficult to come to terms with in terms of it's going to be difficult to come to terms with in terms of making an informed trading decision, okay, based on the primary trend. All right, let's just go through to the hourly chart and just see if the hourly chart is showing us the potential for a dip in an uptrend. All right, this is the hourly chart. Again, gee, this just didn't pan out our way yesterday. We were looking for a cross. And what happened was the inflation data came out. It really drove euro down. We never made it at all to the upper quintile. In fact, we stayed in that lower quintile, and it pushed the candlesticks to the downside. We are getting a potential dip here in an uptrend. Potential, okay? Again, it's very much it's very much a fight against the inflation data. What effectively we're looking at here, just to reiterate, going back to the hourly chart, going back to the weekly chart, I beg your pardon, we're looking for a potential dip in the uptrend. We're above that 30-week exponential moving average. Going through to the daily chart, we just fallen out of zone one and want to see, are we able to reclaim that position? And then going through to the hourly chart, well, are we going to get a crossover trigger one over here? In other words, a positive cross of the EMAs. The stochastics already pushed, so we've got a trigger two. And then if we can make it up to the upper quintile, then potentially the market participants, the Euro US dollar market participants, thinking that they can get in here on a dip in the uptrend. In terms of what you have to understand is that it would be a battle against the sticky inflation. So you must use stop loss and money management. All right, let's just go through to the DAX, see how the DAX is looking to start the day. It's taking its time. Let's just go through to the DAX weekly. That's odd. It's not coming through. I know there was internet connectivity problems yesterday. It looks like we may have run into these. Here we go. Again. All right. Came through on the weekly chart. Well, we can see that the DAX weekly chart is moving in that northeasterly direction. It's above the 30-week exponential moving average. We did mention yesterday that it's overbought. That overbought condition is troublesome. Nevertheless, if we go through to the daily chart, I beg your pardon, the hourly chart, we did get a crossover yesterday. So trigger one, we got a trigger two. Got a trigger two over here. But we never got into the upper quintile and we never held in the upper quintile. So potentially a second chance here on DAX. So we wanted to see if we get angle and separation here in the with the exponential moving averages. We want the exponential moving averages to move in that northeasterly direction. And a big clue here is going to be the stochastic. The stochastic, keep an eye on it to cross up, okay, to get blue above red and to move into that upper quintile. And then if we move into the upper quintile, then we've potentially got the swing on. Let's just take a look. Gee, the internet is really not behaving. There we go. We just want to see if we're going to get the swing on. I'm going to take a look at the DAX on the daily chart. Let's just see if the internet cooperates here. All right, so it just doesn't look like we're getting that feed from the DAX through. I don't want to I don't want to just here it comes. I was going to say I don't want to just keep you guys on the live stream without the data, but here you can see we are in zone 1. Okay, we are in zone 1, so we are in the bullish area, and the fact that we're in the bullish area means I think that we can, just going back to the hourly chart, just try and keep an eye on the upper quintile. Hopefully we get into that upper quintile and hold. The internet just giving a little bit of trouble this morning. I want to try and bring up the S&P 500. Just going to try and bring that up. If it's going to slow us down, we will conclude at this point. Let's just see if we get the SPX 500 coming through. All right. I think what we're going to do is conclude at this point. Apologies, the internet just seems a little finicky today. Let's conclude at this point. I want to wish you guys a good day ahead, a good weekend ahead, and we'll pick up again on Monday. Hopefully the internet's a little bit smoother then. Thank you very much, guys, and speak to you on Monday.